So, Sean, a big issue for producers is income tax planning. Can you lead us into some of those strategies that we should be looking for?
Absolutely. That's the fun part about our job is tax planning, because what we want to do is find the sweet spot for everyone. You want to not necessarily always show losses. There's some instances where you want to show profits, but the best way farmers have had in the past to optimize their deductions is through depreciation. I'm sure almost everybody's heard of it and needs to be a little more knowledgeable, and I'm going to make an attempt to do that. Any equipment that's bought in a current year that's used in a business, and that includes tractors, combines, buildings, cattle, breeding stock, you can write off up to $1.160 million in Section 179, which is a one-time, and that is also limited to your taxable income. So there are limitations on what you can take. Over the past few years, Congress has allowed us to take what we call bonus depreciation. That depreciation has no limits, except for in 2023, rather than being able to deduct 100% of what you purchased, you were only allowed to deduct 80. So as far as tax planning is, finding your sweet spot and using the Section 179 and the bonus together. So you really are afforded a large number that you can play with as far as watching or monitoring your taxable income.
So, Sean, let's say you just bought a farm and we know that land is not depreciable, but are there aspects of it that can be depreciated for income tax purposes?
Yeah, there's a lot of things that can be done. Take a look at your fences. You can deduct your fences, wells, windmills, anything that's on that piece of property, essentially that you can move and take with you if you wanted to. Those would fall into your bucket with bonus and Section 179. But there's also a neat little item that's in the code, and it's called Section 180 fertilizer depreciation. What that is, there's a company that I've worked with out of Iowa that analyzes the nutrient value in the land you purchased. The nutrient value has been in a range that I've used for my clients just this past year. It's been anywhere from $1,000 to $2,000 an acre. So let's say you buy a section of land, you would have a $640,000 deduction available to you. That deduction, you can either take 100% in the year purchased, or you can amortize it over 4 years, your option. Those are your choices.
Let's go back to 179 depreciation. It's been a little bit interesting as we watch the phase outs. Can you talk about more about what a phase out is and what we should be watching for?
Phase outs are what Congress has done to limit our fun at tax planning, I think. But what happens is, as most laws, they phase out over time. For example, I mentioned the bonus depreciation where you only allowed 80% deduction in 2023. That reduces 20% per year, so by 27, it's no longer available. Now, the same is happening with Section 179. So be cognizant of what you're doing and discuss this with your tax advisor so they're planning for you 5 years ahead, not just 5 months ahead.